Today is Tuesday, September the 3rd, and you can see the markets opened down, dropped a little bit, and then just basically we're flat with some movement upwards towards the end of the day in all three markets. Volume was very low, except in the NASDAQ where we see typical volume, but still below relative volume. But very low in the Dow and very low in the S&P 500. So I wouldn't get too worried about what we saw today. It's certainly a reaction to new tariffs that went in place over the weekend, but the Chinese are not fazed by it, and they have not retaliated, and they're looking for some calmer heads to prevail. The decliners, however, led the advancers by 70% to 30%, which is going to take our money movement indicator down a little bit, not too much. We won't hit the neutral line, but we're still in this churning pattern. What did we say about this up here? We said that we expected it to go a little bit higher if it was going to be anything like historical moves in the past, but that seems to have stalled, and a little bit of the momentum has turned to money moving out of the market. However, we'll see a little bit clearer tomorrow and the day after. Let's look at the VIX, which we haven't looked at, which is the volatility indicator. And if we look at it going back to 2015, this is the volume of transactions in the VIX, with the red being the sellers and the white being the buyers. And you can see 70% of the action takes place in between these two lines. And today we've moved a little bit out of that 70% comfort zone. If we go back in time, we can see back in the period of 2008, 2009, we never really got into that 70% zone very often because of the turbulence that was in the marketplace. Are we going back to those times? Well, we had this spike back at the end of the year. We had this spike back in February of last year, and we had this big spike August of 4 years ago. So not a lot to say in terms of rising fear at this point. The S&P down 20, but let's look and see, let's just get to today. Let's see what happened in relative terms. Let's say we came down and we filled the gap. If you take this wick and this one here, let's say that we've closed that gap and we finished above the 8 EMA. I still think that the market will continue to move upwards. So I'm going to put a new arrow here, and I'm going to say we're probably going to continue to see this kind of churn because we're in the cloud and because there's uncertainty. But the big traders are back from vacation now. Give them a day to settle in. We'll see what happens tomorrow. The bottom of the cloud still should be very strong resistance, strong support. We finished a little bit at the top end of the market today. We didn't finish down at the bottom, so that's a good sign. Apple came down to touch the cloud and move up. I still think Apple is going to find its way generally moving upwards. And of course, they have that new product launch coming on September the 10th, and they've indicated that with the China tariffs, they're not going to raise prices, and that is partly due to the fact that they're refreshing a lot of their products that are probably going to come in at lower cost to them. So by not raising their price, they're able to maintain their margins, even though they have to swallow some of those tariffs. Caterpillar, I still think it's in an upward direction, saved by the 8 EMA. It did go below the 8 EMA, but the 8 was where we came to, close to where we came to rest today. Gold was looking like it was going to pop and was going to hit a new high, a recent high, but it did pull back when the rest of the market started to move up a little bit. It's still a good stock to be holding. I didn't buy any, but it's going to be a good hedge for those days when other things are losing. Whirlpool got socked pretty badly. we said that it would have this churning activity in the cloud. It did get support on the 50% Fibonacci, and it did get support at the bottom of the cloud, just like it did back on August the 28th. So we are still going to see that churning in the cloud. It also got resistance at this famous trend line. Remember, we're following two different trend lines, the blue one and the red one, and it got resistance on that trend line, which we would expect short-term sellers to be sitting and looking for a place to sell. And they're buying at the 50%. Snap, which is something that we're looking at, has broken out of this channel, but it's still in the cloud. Have we closed the gap? I would say because of this one coming down and nearly closing the gap, I would mark this gap as closed. Let's see if we can get rid of it here. Can't get rid of it. There we go, get rid of it. So let's keep an eye on Snap, but it's still not time to buy. It's still getting pretty strong resistance by the top of the cloud. So where are we going in the S&P tomorrow? Today was a pretty solid day down, but because we finished at the top of the range, I think tomorrow we might see a little bit of a movement up. Not big, but a little bit. I am going to be out of the country from Thursday of this week until Sunday the 15th. So tomorrow will be my last video for 2 weeks. It's just impossible for me where I'm going to have reliable internet access and being able to pay attention to the market. I'll be watching the market on my phone, and I might be tweeting a little bit, but because of the time zone that I'm going to be in and difficulty with the internet, I won't be able to get online. So I'll see you tomorrow.